All right, welcome back to a Traders and PJs family. Sorry, I'm a little bit off here. I just did another video, and this will be the second video for today. Today is July 8th, Wednesday, and today we will be going over the Week 10 recap, or Episode 12 of $1 Million Trading Gold Challenge. And I'm really excited about this video because, well, as the title says, I made $10,000 in profit in one trade and in 1 week, which is a huge milestone for me. I've done that before, but this is actually realized, unlike the oil play that I mentioned previously in my other videos, which were unrealized and actually unfortunately turned into not a great trade, as you guys saw in my old videos. But anyways, so as always, please feel free to ask any questions during the lesson, and keeping in mind the GFast mentality, the chat is saved, so I'll read it when I get a chance. And if you can't catch my video live, please feel free to leave a question in the comments, and I will always answer those when I can. And let's get started, as I'm really excited to talk about the fundamental trade that I made this week. Although I will say, if you're watching this video, I would highly recommend watching my last video, episode 11. Which is the Week 9 recap, because I think the fundamental event and the way I traded last week was much safer and much more highly recommended as a consistent strategy, instead of the trade that I made this week, last week, which is June 29th, and this week, which is the June 29th week and July 6th week. These 2 weeks I made very high risk trades. I felt very comfortable with them, but they were much more risky than I would ever recommend other people to do in their trading strategies, versus the Royal Caribbean Cruise Line trade. It was very safe. It's very makes a lot of sense, and is a much higher probability of success trade than these two that made me a lot of money. But just because the result was good doesn't mean it's a good trade, and that's something all traders should always keep in mind. Don't just be results oriented. Make sure that you're really learning from each trade and why it worked, and if you should continue to do that in the future. So as always, the 5 ways to support the channel is: number 1, like, comment, and subscribe. It's completely free, and please turn on the post notifications, because as you have seen, my posting schedule is not very consistent. And also, please consider sharing this with others that you think might find this content very useful. And the 3 links below, which is number 1, the Amazon affiliate link. You don't have to buy the product that it links you to. As long as you buy any product using the link, after using the link, it will support the channel. There's referral links in the description below, as well as donation links. Never required, but always appreciated. And a disclaimer: remember, everything said on my video is just my opinion based on my experience trading, and is for educational purposes only. Trading is very risky. Nothing I say is advice or recommendation. Please read the description and trade at your own risk. All right, so as I mentioned in my last video, and I'll quickly mention in this video, I have been spending a lot less time on my $100 trading challenge, which is my Webull account. As you can see, it took a loss, but that's kind of a little bit uncontrollable. But what I have been doing is pretty much just playing PDUFA announcement run-up plays based on biopharma companies and the biopharmacatalyst.com website, I think it's called. But I did mention this in my last video, which is the options on XPXS. Because as mentioned, there was a huge drop in the SPY on the week of June 29th. And I've always been bearish. I have pretty much given up on being bearish in this market after what happened. But I went during that week and during this last week, June 29th, I had additional confidence that it would continue to go down. So I bought another option, investing a total of $32 of my small account into this trade, and unfortunately losing about $12 from that trade, because I bought one at 20, bought one at 12, and then sold them both at 11 on June 29th, Monday of this Week 10 recap. And so that obviously was extremely bad for my small account. And if we'll move on to the performance since inception, you'll see that I have a total of actually $58.48 down from the $100 trading challenge, which because you have to take out the SPHD, which is from referral stocks, and RF is also a referral stock as well. And so you take out the performance from referrals, and only from my trading experience, trading results, it's down 58%, 58.5%. There will always be ups and downs in trading. That's why it's important to have good risk management. And if you have a small account, I recommend trading stocks until you're very comfortable with them and don't trade options, because even if you are comfortable with them, you can be wrong. And it cost me to lose $12 out of a very small account as is, $12 out of a $60 account, and that's a large percentage. And so, oh, whoops. I can finally change this. Awesome. All right, so in my main account, and why I'm really excited for this video is I am finally positive again. Finally. My main account is currently up $4,358.14. You can ignore the percentage. I still haven't decided how much I want to keep in my main account yet, but I am finally back in the positive, which is awesome. And I will talk about the big trade that I made, the single $10,000 trade I made the week of June 29th, that netted me a really positive result. Before I do so, I'll talk about my long terms. As I mentioned in my previous video, it dropped down a ton because the SPY dropped, but then the SPY just immediately rebounded. I'll show that quickly. So June 22nd, week of June 22nd, I think Apple said that it was closing stores. Everyone panicked. SPY dropped all the way down to 300, and then June 29th, the SPY rebounded all the way back up to 315, and it's currently trading at the 314 range. And so both my long-term accounts obviously just followed along, and I don't really care how they do, right? It's a long-term investment account. I only care about the dividends they pay me each month. And if you can see here, I'm very happy to say now I'm up $25 in my M1 investing account, and I don't even know. I started in May for the Chase account, so it's probably like $10 or so in dividends. But I mean, almost $50 in dividends just from my long-term accounts, which is awesome. All right, so let's go into the main trade that I made this week that netted me $1,000 or $10,000. Sorry. So I'm pulling up my history here. June 29th. I did have just like my small account, I made XPSS plays. I also made that in my main account with a really big position, 22,000. Obviously was wrong in that trade. 22,000. How many did I fill? Quantity. Did I sell or buy this? Is this a debit? Total 225 FX close. Minus 100 bought. So I closed at 22,000. So I forget how much I bought it in for, but whatever. It wasn't a big loss actually, because I kind of just took it. I kind of saw that the market wasn't going to go down, and once I took that as a signal to get out of that position immediately. And so the big play that I made this week of June 29th is not Facebook, actually, funny enough, is Tesla. And so I bought a Tesla call debit spread. As you can see, I invested about 11,000 in total, 7,445 plus 4,878, which is $12,000. Here you go. Here's the math. $12,000 in total into that position. And why did I do that? So let's pull up the Tesla chart here. And I invested right here. So I'm not a big fan of investing in hype stocks. I've mentioned this previously. I got burned investing in Nikola. Now you're like, well, then why are you investing in Tesla last week? And quite simply, it's because after investing in Nikola, I kind of learned how hype stocks react and act during random news events. And so instead of getting burned by it, I said, why not just take advantage of everyone's craziness and irrationality and take advantage of the hype, right? So what I did is on June 30th, right here, June 30th, and you can see the news events, June 30th, or not. Anyways, June 30th, this is June 30th. I actually didn't even, I saw that, I was like really surprised that Tesla broke 1,000 and held above 1,000. Right? Did it break 1,000? Yeah. So it broke 1,000 and held above 1,000 on June 29th. June 29th, right here, $1,000. Let me move this here so it's a little easier to see. Here, 1,000. So you can see here that on June 29th, it broke 1,000 and held above 1,000. That, number one, is a great indicator for me because I know technical traders are going to see that as a key level that just got broken. Remember, psychological support and resistance. But I didn't actually look at this stock until, I don't even know what time. Hopefully it shows time. Please, Robinhood, show the time. Okay, 9:42. Thank you. And then I bought some more at 9:45. So 3 minutes later. 9:42, 9:45. So I actually entered pretty late into this trade because I got a two-legged move, and we talked about this in my old videos. I saw a two-legged move, and I saw a really strong momentum going up from 1,000. So I'm like, okay, people are happy that it broke 1,000. And then there was also a headline that there was some sort of leaked email, and I actually didn't even care enough to look into it, that probably said like, I saw some headlines saying like positive deliveries or something, data that got leaked. And so I immediately just hopped on, knowing that Tesla is a hype stock, and that it would probably skyrocket, and I'd be very safe to make this play. And what play did I make? Now it was trading at 1,030 or 26 at the time that I entered this trade. And the trade that I made actually was, as you can see here, $1,000 a buy, and then I sold the 1030. And so it was already trading at 1026 when I entered the trade, and the price that I paid for this was what? $15.50, right? So I paid $15.50 for this one, and then $16.50 for this one because it started to move more in that direction. If you look at, let's say 1042, yeah. So wait, that can't, is that right? No, 942. Shoot, I was like, that doesn't seem right. 942, and then 945. I entered my next lot of that debit spread, and it was trading at 1028. Okay, it was basically already at 1030, and I was getting it at basically 50%. I was paying $15.50 for my max profit if Tesla holds above 1030, and it was already trading at 1030 when I wanted to enter the trade. So my break even was 1015 down here when I bought and entered the position when it was up here. Now I entered this trade for two reasons. Number one, it broke $1,000, which is a great key level for technical investors. And number two, there was a fundamental event saying that they had a leak email, and I didn't even look into it at the time, but it turned out that there was really strong positive delivery data in that email, and so the stock, as you know, after skyrocketed. And so I was very safe, and it was never near danger. June 30th was this day. It literally shot up to 1080 the day I entered the investment, and then just continued to skyrocket after. So it was a pretty easy trade. I put in 12,000, and I think I even returned more than that. So let me take a look here. So I put in about 12,000, and then I sold it at 23,000. So I made about $11,000 in that trade, and hopefully that makes sense on why. But it's funny enough, I actually made a trade this week, and I'll talk about it at the end of this week. But I invested in Amazon, and I just want to talk about it here too, because I'm really happy about the trade, but it's still very risky. You can see. It's a very risky trade, and you can see the lines I drew here. Bye again. So I entered this trade at the beginning of the week because Amazon broke 3,000 on, is it July 6th? Yeah. So on July 6th, there was a headline. I saw breaking news on Twitter that Amazon broke 3,000. And just purely based on that, and I understand that there's earnings at the end of the month, and there is likely going to be earnings run up going towards that. I bought a 2980, 2995 debit spread, and while it was trading at 3,000. So July 6 here, right here, July 6, right? July 6, yep. So it was already trading above my max profit, and I bought this. It was crazy. I bought this at $7.50. And so it was very similar to the Tesla trade, but I get an even better break even because my max profit is already below where it was trading at when I entered the trade, which I can show you here, I think. Hopefully they at least show this. Okay, so Amazon call debit spread July 6th. And you can see I did it in pieces just to be safe. But my first one was at 11 o'clock, and I paid $7.50 for that for 10 shares, for 10, so 7,500. And I can potentially earn 100% because I'm only paying $7.50 out of a $15 spread, right? 2,980 to 2,995. And so I can make 100% return on that investment. And at 11:01, let's see, 11:01, it was already trading at 3,000, over 3,000. So I was already at my max profit, and then I felt that the headline was going to cause a lot of investors to rush into Amazon because, oh my God, Amazon broke 3,000. So this is me taking advantage of hype. I don't think this is rational investing, and also this is not a very safe trade. As you can see, I had a few heart attacks as the market has come down a few times today. or there's this week just in the last 3 days, but it's continued to hold above 3,000 so far. And the reason is simply I know kind of how hype stocks, how irrational investors act. And so if I know that they're just going to rush in, I'm just going to take advantage of that. And I know that they're probably going to hold the price above 3,000. And you can see so far I've made about 7,000. This is my average cost is 765, so a little less than 100% potential return, and I'm currently at 45% or 30%. It jumps around a lot. So I'm excited to recap this week's trade on Amazon at the end of this week, but I just wanted to show that trade as well. But as I said, watch the last video because the Tesla trade and the Amazon trade, yes, they're successful, but you can't just focus on the results. These were very extremely dangerous trades, and if I didn't have the risk appetite I have, I would not have made these trades, and I would never recommend my friends or family to make these trades. It's very risky. Versus the Royal Caribbean play that I talked about in my last video, which is much safer and much more logical versus just taking advantage of hype investors in the stock market. Not to say you can't, and at least now you have this tool in your tool belt, as do I, and feel free to use it if you feel comfortable. Again, remember the disclaimer, and trading is very risky. Trade at your own risk. So that's it for today. Let me know if you have any questions. Hopefully this was exciting for you guys to hear about and kind of see the results that you can have. Both of these trades were 100% return trades. Just focusing on the absolute number is not a good trading mentality. And I always mention these in my previous videos. If you're a trader, you think about it in percentages. And I made about 100% return on the Tesla, and I will probably make around 100% return on Amazon. And so whatever you invest, you would essentially double it in a week. And that's the craziest part about this trading strategy is I like to trade weeklies based on fundamental events, and because you can make insane returns in 1 week. I highly recommend doing credit spreads, and that is why the Tesla and Amazon play are sort of unique. They were debit spreads, but you can only make these kind of returns taking a little bit more risk, which is what I did. And I would recommend, nothing I say is a recommendation. Options trading is very risky. Do everything at your own risk. But, if I was talking to myself, I would generally lean towards credit spreads over debit spreads. Let me know if you guys have any questions. I'm going to stay on for another 45 seconds. Hopefully you guys found this really helpful and really useful. As always, may volatility be ever in your favor trading this week. And I hope to see you guys at my next video. Let me know if you have any questions. As always, if you have any questions and you're not watching this live, please feel free to leave them in the comments, and I will try to answer them when I can. Okay. All right. Looks like there are no questions. Thank you, whoever you guys are who is watching live. Thank you guys so much. It means a lot to me. Hopefully you guys will at least feel comfortable commenting or saying something in my future videos. But as always, I really appreciate you guys tuning in. Thank you guys all for the support, and best of luck trading this week. Take care.